Welcome back, everyone. Michael here with Offshore Citizen. Today I'm going to discuss a little known jurisdiction, so it's kind of a sub-jurisdiction of the world as a place to form a company, to have some operations, to do banking, etc. And that is Labuan, which is a part of Malaysia. So for those of you who are not familiar, you can go and kind of look at a map. It's a little island that's actually I think it's a 2-hour flight away from Malaysia. I went there the last time I was in Malaysia. Or I guess not away from Malaysia, away from Kuala Lumpur in Malaysia. It's part of Malaysia. And it is a place that has increasingly been on our radar, and we've started using it for the last few years quite a bit as a place to form companies. I'm going to explain to you why. I'm going to explain to you cases where it's probably not a good idea for you. And then we can see if it's something that is a fit for you. So before we get started on that, if you haven't already, please hit the subscribe button, hit the notification bell. Our favorite people in the world are subscribers. We like you guys. Thank you, everyone who has subscribed. And if you're at all interested in how to pay the lowest legal amount of tax possible, how to build an international structure, how to set up a company to do business around the world, where to hire people, how to hire people, etc. You want assistance with forming companies, with opening bank accounts, with getting residencies, with getting citizenships, please reach out to me. You can book a call, clarity.fm/Michael Rosmer. There's a link in the description below. Or you can visit our websites, offshorecitizen.net and offshorecapitalist.com, and send us a message through there. All right. So let's dive into the subject of Labuan. So Labuan, I would say, started to become popular for us maybe like 4 or 5 years ago, based largely on the fact that Hong Kong was becoming more difficult. So if you were to compare Labuan and Hong Kong on the surface, they are quite similar. However, the difference was that in Labuan, you had sort of like there was tax in Labuan, and there was no tax if you could structure through the offshore exemption in Hong Kong. So Hong Kong seemed kind of like the more accessible option for quite a while. Basically, the way they had it for quite a few years until I think it was the start of 2019, so it was the end of 2018 they brought in. They had this maximum tax. So you could opt for either 3% tax on a trading company, it was 0% on a holding company, or up to, it was a certain number of Malaysian ringgit, which as the Malaysian ringgit went down, equaled about $5,000 per year as a maximum tax. You can just say, hey, listen, to heck with the 3%, I'm going to pay the $5,000 tax. And part of what was good about that was that if you did that, you could avoid the audited financials, which kind of simplified your life in terms of maintenance. It was great. Unfortunately, then enter the start of January 2019, and they decided, hey, we're going to change that. We're now going to abolish the maximum tax. We're going to implement substance requirements, and we're going to make it that you may end up having some other consequences. So this is a pro and a con, and I'll kind of explain quickly why that happened. So in the world today, there is this move towards substance. Okay, in particular, I would say leading up to 2019, we saw more and more aggressive action by different parts of the world, in particular the EU, but through the OECD, etc., to crack down on tax evasion, on offshore jurisdictions. Basically, countries didn't like that a bunch of their tax base was slipping out into other parts of the world. They wanted to try and grab it back. And there's a couple different ways they can do that. One is, okay, they get better at cracking down. They did that through the Common Reporting Standard and FATCA. And so, made it easier for them to police, right? Another way was to kind of like name and shame and blacklist certain jurisdictions, right? That was something else that they did. But the third was they basically tried to elevate the costs of operating in some of these places to make it not so worthwhile to go there, okay? So if, for instance, you say, hey, I'm going to set up a BVI company, but I have to have substance in BVI. Well, first of all, BVI is a terrible place to have substance. And if I have to employ a bunch of people there who are just kind of a waste, well, then, it's not so cost effective maybe for me because, for the tax savings, I could have just, taken those wages and put it towards tax in, a reasonable tax country like, say, Bulgaria, right? So what that did was it started to shift focus away from pure offshore into what we called midshore, right? And in particular, this, I kind of would say the height of it came when the EU brought in what's called the Anti-Tax Avoidance Directive, okay? So the Anti-Tax Avoidance Directive was the really big push to require substance. And so this is when you saw a bunch of places such as BVI and such as Labuan say, okay, great, we're going to bring in substance requirements because we don't want to get blacklisted. We want to be in a situation where we can have people operating there, etc. So we liked this quite a bit, actually, and Labuan became one of my favorite places to form companies. It's not for everybody. There is no one size fits all. So if, for your individual circumstances, please reach out to me. Happy to help you figure out what is best for you. However, that being said, Labuan is great for certain people. Why is this? So, okay, you form a company there. If it is a holding company, potentially you can have zero tax. And actually, I just got the updated regulations like a few hours ago that they released. They're retroactive, but regarding the substance requirements for certain types of holding companies. So that's very cool. I'll cover that in a second. So that's the first thing is, okay, 3% tax, I'm willing to pay 3% tax, right? I have no withholding on dividends. 3% is pretty reasonable. If I can potentially have a holding company and pay zero tax, this is amazing. Zero tax is good. It's my favorite number when it comes to tax. So we're happy with that. It's not easy to form a company there. Certainly not like, in UK, you can do it super fast, super quick, super easy. This is not the case in Labuan. You definitely need a lot of due diligence. So the process is a bit tedious and takes a bit of time. But that being said, it's okay. But then we have the next question, which is, well, what about banking, right? So when you're with a Labuan company, you can bank in Malaysia, which is great. And it's particularly great because of the fact, well, it has a bunch of banking options, but more significantly, you can get the Singapore banks there. So OCBC, UOB, etc. Standard Chartered is there, obviously not Singaporean, but still good quality bank. So you've got a bunch of banking options. And in a world where it's harder and harder to get like tier 1 banks, this is very appealing. And we kind of view that your banking is more stable there than if you have, say, a Hong Kong company banking in Singapore, because it's more likely that Singapore will close down a foreign company account than that Malaysia will close down a local Malaysian account at UOB in Malaysia or OCBC in Malaysia. So from a banking standpoint, we're like, okay, great. We have low tax. We like that a lot. We have efficient banking. We like that quite a lot, right? Number 3, let's talk about substance. Well, if you're in a world where you have to have substance, then the question is, what's the cost of that substance, right? So if we go and take a look at, say, a Hong Kong company, well, 2 things are an issue, right? Aside from the substance part, or sorry, aside from the banking side of things. Number 1 is, the moment I have substance there, now I don't have zero tax anymore. Now my tax goes to 8.25% for under 300,000, or over 300,000, I'm at 16.5%, right? Well, 16.5% is not competitive with Bulgaria, for instance, right? So now all of a sudden it's kind of questionable why I would be based in Hong Kong. East-friendly business jurisdiction, but maybe not so good, right? So that's the first thing. The second is it's not cheap to have substance in Hong Kong. Imagine you have office space, that's not cheap, right? Real estate is pretty much the second most expensive in the world in Hong Kong after Monaco. And in addition to that, people's wages are not so low, right? So it's just not a great place to have substance. Let's move over to Malaysia, right? Malaysia, it's super cheap to have substance. You can employ people for less than $500 a month. That's, pretty cheap, right? Obviously, you're not talking about like sophisticated coders or something like that, but an administrator or something like that, let's say it's going to cost you, say it costs $500, $600, heck, if it cost $1,000 a month, not such a big deal, right? So that's good. Next, cost of office space, very low. So now let's dive into a little bit how these substance requirements work. So the substance requirements typically have 2 parts, right? The first part is a minimum presence, which in most cases for the type of stuff we're looking at, trading companies, and by the way, it's a little bit confusing because they list out all different types of companies that can qualify as these trading companies. And so the question is, where do you fit on there? So you sometimes have to kind of like fit yourself into one of those categories. But anyway, that being said, you do that and you're like, cool. I've got that. I'll have a 2-employee minimum. Okay, so I need 2 full-time equivalent employees, and they have kind of like a minimum salary and how they figure that out, and a certain minimum amount of office space. Okay. In addition to that, I'll have to spend, or not in addition, included on like in parallel with that, is you need to spend about 50,000 Malaysian ringgit per year or more there. Okay, fair enough. What is that? That's about $12,500 US per year that you would have to spend in Labuan, okay? So now, notably, that $12,500 can be included in the wages, can be included in the office space, and can be included in your like annual financial auditing, filing, etc. requirements. So in other words, if you're paying for these things, it's not hard to get to the 12,500 US dollars, 50,000 Malaysian ringgit, okay? If you're talking about holding companies, then often it's a higher threshold. For certain, it depends, like based on the license that you have. It could be 100,000 Malaysian ringgit. I believe there's some that are actually 200,000. Anyway, it's not a huge amount of money, and there's a certain, sometimes the threshold of people is higher. That being said, if you are having a pure equity holding company, okay, then your requirement is no people, and there it's exempt. There is a minimum amount that you have to spend, which is 20,000 Malaysian ringgit, about 5,000 US dollars. It's a pittance, it's fine, right? And in that case, that company could actually be tax-free, so we like that a lot. Additionally, you can be in a situation where you can have a non-pure equity holding company, in which case you have one person as a minimum requirement, and you have, again, 20,000 Malaysian ringgit. That was like just the new rule updates that was sent out. I read them this morning, whether, I don't know where exactly they were sent out, but anyway, I read them this morning. So that's pretty cool, right? That's a pretty reasonable threshold to meet. And why I like this is, if you think about a foreign tax department coming to you and they're like, hey, why do you have a company in Malaysia? It's like, well, because I have employees in Malaysia. I have an office in Malaysia. The bank asks, hey, listen, why are you banking here? Well, I have a company here, I have an office here, I have employees here. It's very obvious why I'm banking here. So all of this goes together to provide good, stable, long-term structures. In addition to that, and I'll do a video in the future on Malaysia and residency programs, etc., because I love Malaysia, but you can get a Labuan director's visa. So as a director of a company, you can potentially get a visa. It's going to cost you some money, etc., but you can go and live in Malaysia. It's a 2-year visa. So that's also a benefit. So I'm a big fan. And finally, the thing that's really cool as well is Labuan is actually included in a bunch of the tax treaties that they have. Now, it's excluded from some of them. So for instance, Australia, if you're in Australia, probably Labuan is not the best place for you, right? So this is why I say it's country by country. There's, I want to say it's like 13 or so countries that exclude Labuan from the tax treaty benefits, but a wide range of them do include them. And why this is important is because then you can resort to tiebreaker clauses in residency requirements between countries. And so that's pretty good, along with kind of the other pieces that go along with it, such as I was mentioning in another video, the permanent establishment rules, and of course the withholding rules. So anyway, all things being equal, I love Malaysia. It's probably one of the top 5 most common places that I tend to form companies. Definitely, a great place to work with, and might be really good for you. If you're interested in more details, like I said, please reach out to me because it is all case by case. I try to give you good information, but that being said, what's good for the person over here is not necessarily good for the person over there. Every individual circumstance matters and depends on your business, etc. So reach out to me. Again, you can book a call, clarity.fm/Michael Rosmer, link below, or visit our websites, offshorecitizen.net, offshorecapitalist.com. I hope you liked the video. If you did, give it a thumbs up. Share it with your friends. If you didn't like it, tell me why in the comments below. Hit the subscribe button, hit the notification bell, and as always, we are here to help you. I'm going to see you guys on the next video.